Stop scrolling. If you are receiving Social Security, SSDI, SSI, or VA benefits, or even if someone you love does, you need to hear this before your next check hits your bank account. We're talking about real dollars, real increases, and big changes coming in 2026 that could mean hundreds more in your pocket, or thousands less if you're not careful. By the end of this video, you'll know exactly how much your check could change, why some Americans are fighting for a $1,300 minimum benefit, and what new rules could affect your ability to earn money without losing benefits. Stay until the very end because I'm breaking down all the updates the government doesn't want you to miss, including secret tax breaks, COLA increases, and what you absolutely need to do right now to protect your income. If you think your benefits will stay the same this year, think again. This video could literally save you money and prevent surprises in 2026. Before we dive in, I want to say if you want to make sure you never miss updates like this, and I promise I only share this kind of insider info here on this channel, hit that subscribe button now. I'm going to be uploading more videos exactly on these topics: Social Security, SSDI, SSI, VA benefits, and all the changes that affect your money every month. So subscribing now makes it easy for you to stay ahead and never miss an important update. This channel is made just for people like you, and I want you to be the first to know every time something big changes. Hey everyone, welcome back. If you are someone who receives Social Security, SSDI, SSI, or VA benefits, or if you have a loved one who does, then you are going to want to stick around for this entire video, because there is a lot happening right now that directly affects the money coming into your household every single month. We are talking about real dollar amounts, real changes, and real updates that you need to know about so you are not caught off guard. So grab a seat, get comfortable, and let's break all of this down in plain, simple, everyday English. No confusing government jargon, no complicated numbers thrown at you without explanation. Just the facts, the way they should be told. Let's start from the very beginning so everyone is on the same page. There are millions of Americans right now who depend on some form of government benefit as either their primary or their only source of monthly income. We are talking about retired workers who spent decades paying into the Social Security system. We are talking about people living with serious disabilities who cannot work and rely on Social Security disability insurance, which most people just call SSDI. We are talking about low-income individuals and families who qualify for supplemental security income, known as SSI. And we are talking about our nation's veterans, men and women who served this country and now receive monthly compensation through the Department of Veterans Affairs, the VA. All of these groups are connected because the updates we are going to discuss today touch every single one of them. And the big number you keep hearing about, that $1,300 minimum per month, is at the heart of a major conversation happening right now in Washington and across the country. So let's talk about where that $1,300 figure comes from and what it actually means for you. For years, one of the biggest complaints from Social Security recipients, especially people on SSI and those who worked lower-wage jobs their whole lives, is that their monthly benefit amount is just not enough to live on. And honestly, when you look at the numbers, it is hard to argue with that. The federal SSI payment for a single individual in 2025 was $967 per month. That is less than $12,000 a year. Now think about that for a second. $967 a month to cover your rent, your food, your medications, your utilities, your transportation, everything. In most parts of the United States, $967 does not even cover rent alone, let alone all the other bills that come with being alive. So when advocates and lawmakers start talking about a minimum benefit floor of $1,300 per month, what they are really saying is that no American who has earned or qualifies for these benefits should be living on less than that. And now here's the good news. There has been real movement on this front. Let's talk about what has already happened and what is currently in the works. First, the Social Security Administration officially announced a 2.8% cost of living adjustment, which is called a COLA, for the year 2026. That increase kicked in starting January 2026 for Social Security retirement and SSDI recipients, and SSI recipients got their first boosted payment on December 31st of 2025. So if you are already getting these benefits, you have already started seeing a little more in your check. Now, 2.8% might not sound like a lot, and honestly, for many people it is not enough. We will get into that in a minute. But it is still a real increase that adds real dollars to your monthly payment. Here is what that 2.8% COLA actually looks like in dollars and cents, because that is what really matters. If you are a retired Social Security worker, the average monthly benefit went from about $2,015 in 2025 up to $2,071 in January 2026. That is roughly a $56 per month increase on average. Now, some people are getting more than that, and some are getting less, depending on their individual earnings history. But across the board, the average retired worker is seeing that bump. For SSDI recipients, those are people receiving disability benefits based on their work history, the average monthly benefit went up by about $44 per month. The average SSDI check is now right around $1,630 per month in 2026. And for SSI recipients, the individual monthly payment went from $967 in 2025 up to $994 in 2026. Couples who both receive SSI saw their combined monthly benefit go from $1,450 up to $1,491 per month. Now let's talk about the maximum SSDI benefit, because this surprises a lot of people. The absolute maximum monthly SSDI payment in 2026 is $4,152. But here's the thing. Very few people actually receive that amount. To get the maximum, you would have had to earn close to the Social Security taxable maximum every single year of your working career and have a very long work history. For most people, that is not realistic. Most SSDI recipients are landing somewhere in the range of $1,000 to $2,000 per month, with the average sitting at that $1,630 figure we already mentioned. So if you have been wondering whether your check seems low compared to what you have heard, now you understand why. Your benefit is based specifically on your own lifetime earnings record, not a flat dollar amount. Now let's get into one of the most important parts of this conversation, the proposed $1,300 minimum benefit and the push to raise payments even further. Here is what is happening in Congress right now. There is growing pressure from both advocacy groups and lawmakers to establish a true minimum monthly benefit floor for Social Security recipients. The idea is simple. If you worked and paid into Social Security for years, you should not be receiving a check so small that it leaves you in poverty. Some proposals have called for setting that floor at $1,300 per month. Others have gone even further. In late October 2025, Senator Elizabeth Warren of Massachusetts, along with Senate Democratic leader Chuck Schumer of New York and several other Democratic senators, introduced a bill called the Social Security Emergency Inflation Relief Act. What this bill proposed was a flat $200 per month emergency increase on top of the regular COLA, applied to Social Security checks from January 2026 through July 2026. If you do the math, That is an extra $1,200 in total over those 6 months for every qualifying recipient. And here's the part that is really important. This $200 boost was not just for regular Social Security retirement recipients. It was also designed to cover SSDI recipients, SSI recipients, railroad retirement beneficiaries, and veterans receiving VA disability compensation and VA pension benefits. In other words, every major group of fixed-income Americans would have been included. Now you may be asking, did that bill pass? And that is a fair question. As of right now, that particular bill has not been signed into law. The passage of legislation in a divided Congress is never simple or guaranteed. But the fact that it was introduced, that it gained attention, and that it specifically named veterans and SSI recipients alongside traditional Social Security recipients is significant. It tells you that the conversation around raising these benefit floors is very much alive and very much on the table. And even though that specific $200 boost has not become law yet, it has kept a spotlight on the fact that many Americans receiving these benefits are genuinely struggling. And that $56 extra per month, what the 2.8% COLA provided on average, is simply not cutting it for millions of families. Let's talk about veterans specifically for a moment, because VA benefits have their own structure and their own updates that are important to understand. The VA uses the same cost of living adjustment process as Social Security, meaning when COLA goes up for Social Security, it goes up for VA disability compensation too. In January 2026, veterans receiving VA disability compensation saw that same 2.8% increase applied to their monthly payments. To give you a specific example of what that means, a veteran with a 10% disability rating saw an increase of about $4.91 per month. That is a small number, but at the lower disability ratings, the base payments are already lower, so even small increases matter. On the other end of the spectrum, a veteran with a 100% disability rating and no dependents saw an increase of about $107.28 per month added to their VA disability pay. Veterans who are married or have children may receive even more because the VA factors dependent status into your monthly payment calculation. Military retirees receiving pension income also saw their pension amounts rise, with roughly $28 extra per month for every $1,000 they were already receiving. Now let's talk about something that a lot of people overlook: the Social Security Expansion Act. This is a separate piece of proposed legislation in the 119th Congress, and it goes further than just a temporary boost. The Social Security Expansion Act seeks to make more permanent and structural changes to how Social Security is funded and how benefits are calculated. Some of the ideas in this bill include changing the way the COLA is calculated so that it better reflects the actual spending habits of older Americans and people with disabilities, rather than the current method which tracks spending by urban wage earners and clerical workers, a group whose expenses look very different from a senior citizen's expenses. Seniors spend more of their money on healthcare and less on transportation and work-related costs, for example. So if the COLA formula was changed to track senior-specific inflation, something called the CPIE, benefit increases would likely be higher in most years. The Senior Citizens League, a major advocacy group, has called for a minimum COLA of 3% every single year, so that even in low inflation years, recipients do not get stuck receiving no increase at all. Here is something else that changed in 2026 that you really need to pay attention to, especially if you are receiving SSDI and thinking about working or going back to work. The substantial gainful activity limit, which is the maximum amount you can earn per month from work before it affects your SSDI eligibility, went up in 2026. For non-blind SSDI recipients, That limit increased from $1,620 per month in 2025 to $1,690 per month in 2026. For people who are legally blind, the limit went from $2,700 per month up to $2,830 per month. What this means practically is that if you are on SSDI and doing some part-time work, you now have a little more room to earn before the Social Security Administration considers you to be doing substantial work that could put your benefits at risk. This is important because it gives disabled workers a tiny bit more financial breathing room as they try to supplement their income. There is also something called the trial work period that every SSDI recipient needs to know about. The trial work period allows you to test your ability to work, to actually go back to a job and try it out for up to 9 months without automatically losing your SSDI benefits during that time. In 2026, a month counts as a trial work period month if you earn $1,210 or more in that month. That threshold went up from $1,160 in 2025. And here's the critical detail. You have 60 months, that is 5 full years, in which to use your 9 trial work months. So if you try working, have a bad month health-wise, stop working, and then try again a few months later, those months all count toward your 9. Understanding this program is really important for people who want to try re-entering the workforce without the terrifying risk of immediately losing their disability income. Now let us talk about something that affects a lot of SSDI recipients that does not always get enough attention: Medicare Part B premiums. This is hugely important for your monthly budget, and a lot of people do not realize how it plays into their actual take-home amount. In 2026, the standard Medicare Part B premium increased to $202.90 per month. That went up from $185 per month in 2025, an increase of $17.90 per month. For most SSDI recipients, that Part B premium is automatically deducted directly from your monthly Social Security check before it ever hits your bank account. So while your SSDI check went up by an average of about $44 per month due to the COLA, you also saw $17.90 more taken out for Medicare. That means the net real-world increase that you actually see in your bank account is closer to $26 per month, not $44. This is why so many recipients feel like the COLA increases never quite seem to keep up with reality. Because for Medicare beneficiaries, a chunk of the raise goes right back out the door to cover the premium increase. There is also a major new tax benefit that was signed into law in 2025 as part of a large spending and tax bill that Congress passed. This new deduction is specifically for Americans who are 65 years of age or older, and it could reduce or even completely eliminate the federal income taxes that some older Americans pay on their Social Security benefits. The provision allows for up to a $6,000 deduction from your taxable income if you are at least 65 by the end of 2025. This deduction phases out for individuals with higher incomes. Specifically, if your modified adjusted gross income is above $75,000 as a single filer, or above $150,000 if you are married and filing jointly. But for many Social Security recipients who live primarily on their monthly benefits and have modest additional income, this new deduction could mean that they owe less to the IRS, or possibly nothing at all, on their Social Security income. That is a real financial benefit that you should absolutely discuss with a tax professional or your local AARP tax aid program to make sure you are taking full advantage of it. Let's also quickly cover the earnings limits for people who are approaching or have recently reached their full retirement age but are still working. In 2026, if you are receiving Social Security retirement benefits and you have not yet hit your full retirement age, The Social Security Administration will reduce your benefits if you earn more than $24,480 per year from work. For every $2 you earn above that threshold, they withhold $1 in benefits. But once you are in the year that you actually reach your full retirement age, that limit jumps significantly to $65,160 for 2026. And once you have fully reached your retirement age, there is no earnings limit at all. You can work as much as you want and earn as much as you want without any reduction in your Social Security benefits. So let's wrap all of this up and bring it home with the big picture. Here is what you need to walk away knowing. The COLA for 2026 is 2.8%, and that means more money in your Social Security, SSDI, SSI, or VA benefit check starting in January of 2026, with SSI recipients seeing it a day early on December 31st, 2025. The average Social Security retirement benefit is now $2,071 per month. The average SSDI benefit is approximately $1,630 per month. The individual SSI payment is now $994 per month, not yet at that $1,300 floor that many advocates are pushing for, but higher than it was. Veterans saw their disability compensation and pension payments go up by the same 2.8%. There are active legislative proposals in Congress to increase benefits further, including both a temporary $200 per month emergency boost and longer-term structural reforms through the Social Security Expansion Act. The Medicare Part B premium went up and will eat into some of that COLA increase for Medicare enrollees. There is a new tax deduction for Americans 65 and older that could reduce what you owe on your Social Security income. And the SSDI work rules have been updated, giving working disability recipients slightly more room to earn without losing their benefits. The bottom line is this: things are moving. The fight to make sure that every American who is paid into or qualifies for these programs receives a benefit that actually covers the cost of living in 2026 is ongoing, and it is gaining momentum. The $1,300 minimum benefit conversation is not going away. Advocates are pushing hard. Lawmakers on both sides are hearing from their constituents. And every update we see, every COLA increase, every legislative proposal, every tweak to the rules, is a step in a larger journey toward making these benefits work better for the people who need them most. If you found this video helpful, please do two things for me. First, share it with someone you know who receives any of these benefits, because this information matters and it can genuinely help people make better decisions about their finances. And second, make sure you check your My Social Security online account at ssa.gov to confirm your exact new benefit amount and to review any notices from the SSA about your specific situation. Every person's benefit is different because it is based on your individual work history, your age, your disability determination, and many other factors. The general information we went over today is a starting point, but your own My Social Security account will give you your personal numbers. Thank you so much for watching. Stay informed, stay prepared, and we will see you in the next one.